Probably like everything.
Probably like everything saya nak faham that it hard. Okay, I think the first one, okay, I did explain last class, but maybe because you're not focused anymore because the time is so long during that period. Okay, I explain it back. Okay, where the company, okay, this is in terms of public practices services. Okay, I already show you in the previous slide that what are the services offered by the accountant firm. Okay, normally accountant firm will provide the service for taxation, for the auditing, for the consulting, for the internal control. Okay, so a lot of services offered by the chartered accountant firm. Okay, so now the question is, okay, when the chartered accountant firm, okay, at the same time provide the services for tax and also provide the services for audit, okay, is that services offered will compromise the auditor's independence. Okay, when you talk about independence, okay, we have discussed that we have two types of independence. Is it right, Fitri? Is it right, Fitri?
I think so.
Okay, what are the two types of independence? Ah, what is the two types of independence? Dependence. So I already write it here. The first one is independent in,
Which one, madam?
yes,
Which one, madam?
this one number one and this one number two. So you have two types of independence. So which one? What are the two types of independence? List me or state to me. What are the two types of independence?
Uh, Reporting independence.
No, no. Okay, when we talk, okay, you remember that we have discussed on the independence. Okay, we have two types of independence. One is in mind and another one is in appearance. Is it correct, class?
Yes.
Okay. So please make sure that you understand the glossary terms. That is glossary terms. So where you have to annoy and sometimes the question might come out to ask you to explain what is the meaning of independence in mind and independent in appearance. So in this situation, when the company offer the two services, taxation as well as the audit, so the services offered will compromise the auditor's independence in terms of in mind or in terms of in appearance. Okay, the answer give you, okay, the suggestion. So this is a suggestion answer. Okay, preparing a tax computation is unlikely to impair. Okay, dia tidak akan impair auditor's independence since a company tax liability would generally be reviewed, okay, as part of the audit. Okay, so this is only a normal routine negotiation between the tax department and the audit department. Okay, so routine negotiation with the tax authority should not normally impair independence. So if let's say, okay, if the company you have the chartered accountant firm will have different people handle the audit and different people handle the tax. So after the audit of financial statement, okay, is completed, as I said here, you have a figure for tax. So this figure for tax, okay, you must verify to the tax department. Okay, tax department. Okay, you verify it to the tax department. So here you have already the the independence between audit firm and tax audit department and tax department. Okay, so means that's why the answer suggests that it is unlikely to impair. Okay, because this is a normal routine in the business, in as the services. So, and the tax department normally those who will communicate with the taxation authorities. So normally it will not impair independence, but there may, however, be a problem. Okay, if there is a significant tax liability is under dispute. So when there is a certain matters arise, okay, regarding the tax provision, okay, or tax payment, since the auditor may believe the account should disclose details of the dispute, okay, but the directors may disagree. Okay, this is a disagreement between directors and the auditor, okay, or the tax department. Okay, and this circumstance, the auditor might find it impossible to act both as an auditor and the tax advice. So because the tax, even though there is a different department, but at the end, okay, it will put under one company. If let's say this audit firm is PwC, so it's still under one roof of PwC, even though they have a different department. So that's why the question suggests, the answer is suggested like this. So if there is a significant tax liability, ini means under dispute, ada perbalahan antara with the amount of provision for the tax provided by the company. So the provision is made by the directors. Okay, and that provision must, as what you learn in financial accounting, okay, all the provision should be disclosed under notes to the account. So the auditor, the auditor may believe the account should be disclosed details, okay, of the dispute, but the directors may disagree. So that is because of this situation arise, okay, there might impact the auditors in mind of the independence. So that is the meaning of the situation. Okay, do you clear? Class Fitri. Apa yang I tanya tadi, Fitri ke?
Okay. Okay, madam.
Yes. Do you clear now the situation?
Boleh dapat sikit-sikit. Yes.
If you not clear, then you should ask me, because if I go further detail, if you don't clear the first at the basic part, then you might have a difficulty later. Okay, this one is if let's say the company is preparing a client's annual financial statement, but at the same time they also prepare they also perform the audit. Okay, so what is the risk? Okay, this is preparing the financial statement. Okay, preparing the financial statement versus audit the financial statement, okay, with the same audit firm, okay, same accounting firm. Okay, the major risk with the auditor preparing the financial statement is that the auditor may not be objective when they review. So this is the self-review traps lah, because this is the example of self-review trap. Okay, so the chartered accountant firm prepare the financial statement and also we audit the financial statement. Okay, even though, okay, in let's say in that department, in the chartered accountant firm, they divide the department into different category. So they have the audit department, tax department, and accounts department. Okay. So the major risk when the auditor preparing the financial statement is that the auditor may not be objective when he review the financial statement. In addition, the audit file may not be demonstrate sufficiently, okay, how the accountancy work has been used as a source of the audit assurance. Okay, the audit file. Okay, so means that the audit file is audit working paper lah. So all the information will be put in the audit file. And then if the client is a public interest entity, PIE, okay, the provision of this service will not be allowed. So this is not allowed actually under code, SCCA Code of Ethics. Okay. The audit firm can counter the risk to independence by having different staff members prepare the financial statement. Okay, at the beginning, so this one, okay, actually this situation is not allowed under SCCA Code of Ethics. Okay, it's not allowed because the preparation of financial statement will impair, okay, the objectivity of the auditor. Okay, objectivity of the auditor. Okay, the audit firm can counter the risk. Okay, so how they balance it? Okay, how they put a safeguard. So this is the safeguard. Okay, the safeguard. Okay, so the safeguard is the audit firm can counter the risk to independence by having different staff members prepare the financial statement and audit them. So this one. Okay, they separate the audit team and the accounts team. Okay. Alternatively, the audit work should be reviewed by someone unconnected with the preparation of financial statement. Audit firms' internal guidance can also help by clearly demonstrating how much audit assurance can be gained from the accounting work and what extra work will be required to give sufficient audit assurance. So means that audit department and accounts department must totally independent. Okay, so that is the safeguard. Okay, put or applied by the chartered accountant firm. If they cannot apply the safeguard, if they cannot separate between that people, okay, who conduct the audit and prepare the accounts, so it is not allowed. So that is situation. Okay, if the audit firm cannot put the safeguard, okay, against the situation, so means it is not allowed because automatically it will impair the independence of the audit. Are you clear? Shamina?
Yes, saya.
Clear tak this situation?
Okay.
Okay. Any question class? Others? So this one, attendance. Okay, attendance of model meeting of the board of directors impose a clear threat to auditors' independence. Okay, because under the auditor's right, okay, you have to relate back with the auditor's right. Still remember what are the four rights of an auditor?
Right.
Can you list one or two rights of the auditor, Nurin Sar? Nurin Sar. Is Nurin Sar in class? Nurul Sarwani Fahmi. Nurin tak ada ke dalam kelas? Ada 19 ni in our kelas. Siapa dah additional one? Okay, Amelia Christina?
Yes,
Amelia?
madam. Yes, madam.
Okay.
4 rights,
Yes.
Tapi only give 2.
Yeah, only gitu.
This one here, the right of access to all accounting books and records.
Yeah, another one.
And the rights to have all information and explanation from management.
Yes, when he considers necessary. Okay. Another two, Hani Adriana. Thank you. Media. Okay, another two.
The right to attend any general meeting.
Attend any general meeting, and another one.
A right to be heard at general meeting.
Okay. A right to be heard resolution, okay, passed by the shareholders, okay, in the general meeting. Okay, so good. So in that situation, number 3 just now you said that the auditor have a right to attend any general meeting, right? General meeting. So in this case, the auditor attend the board of directors meeting. So if the situation will impair the independence, attendance a meeting of the board impose a clear threat to auditor's independence, as the auditor may become involved in management decision on which he subsequently has to report. So means can the auditor involve in the management decision? Fitri.
Macam ni.
Fitri, are you in class or not?
Yes, madam.
Okay. So do the auditor can involve in any of the management decision?
What was the question? Again, madam. My line is not very clear.
Oh, your line is not good. Okay, do the auditor are allowed to involve in any management decision?
Yes.
I think no. I think
Okay.
the auditor need to stick with their job.
Okay, so auditor must be see and be seen independent. So this one, in appearance. Okay, so auditor must seen and be seen independent. Okay, clear? So okay, not allowed. So on which he subsequently has to report. Legislation often also regard as a director anyone who carries out the function of the director, and auditor would be exposed to this provision if he regularly attended board's meeting and hence would be ineligible under legislation to act as an auditor. So what does it mean? If you always attended regularly, attended the board meeting, then you might be ineligible under legislation to act as an auditor. So means that you can be disqualified to become the auditor of the company. Okay, so the best way to preserve auditor independence would be for an auditor only to attend the board's meeting at which the annual accounts are discussed. So maksudnya how many times you can attend the board of directors meeting? Okay, maybe 1 or 2 times when the annual accounts are discussed. Annual account, so means that you audit the financial statement of the company. Then if you need any further explanation or you want to present your report to the board of directors, then you will attend the board of meetings. Okay, at which the annual accounts are discussed and your independence is not compromised. Okay, clear class?
Yeah.
Okay, good. So now, any question? Any question? Any more question regarding the traits to the fundamental principle? This is one example on the self-review track. Okay, where it will affect the objectivity and independence of the auditor. if no question, okay, what is the answer for number 6? This one. In which of the following situation it is not appropriate to disclose confidential information?
To obtain evidence about an item in the financial statement.
Okay. B so consider the second bullet. So client granted permission, yes, to fulfill a public duty, yes, to fulfill a legal duty to disclose, yes. So second bullet is not the answer. It's not appropriate to disclose confidential information when you are going to obtain evidence about an item in the financial statement. Okay. So now, can I proceed? Okay, shall we proceed to the next topic?
Yes.
Okay, so now chapter auditor's appointment is quite simple because you already understand okay what we have discussed earlier. Okay, in chapter 3. Okay, chapter 4 on the auditor's appointment. Okay, you have to know who is okay regarding the auditor's appointment. Okay, you have to know what is the appointment procedure and what are the risks that you need to evaluate before you accept the appointment. Okay, before accepting the appointment and agreeing the terms of the engagement. So after you accept the appointment, then you have to agree the terms of the engagement between the auditor and the board of directors. Okay. So now we will look at factors. Okay, consider before accepting the audit engagement and purpose and nature of the engagement letter. Okay. So remember or not on part A you ada previously okay 1, 2, 3, 5. Okay, so this is number 4. Okay, number 4. Before we go to the section B. Okay, the first one. You have to look at in terms of the professional requirement governing the appointment of new auditor. So in the case of okay, I will share you the articles after this regarding the appointment or changes in the professional appointment okay, of the auditor. So in the case of the company, okay, so you have okay, in the company, okay, you have new company, okay, and you have established company lah. Okay, for a new company, okay, means you are the first auditor. Okay, normally the first auditor of the new company, so this is a new established company. Okay, the first auditor will be appointed by the board of directors. Okay, for the established company means new company and so first year. So established company means on the second year operation lah. Okay, for the second year, so maybe they have a auditor. Okay, we not call it anymore the first auditor. So they have the existing auditor. Ataupun some book calls current auditor. Okay. So this is the terms for the established company. So the second year operation onward, okay, they have already existing or current auditor, okay, which may have been appointed in the first year by the board of directors, and they have the existing or current auditor, and maybe on the 5th year or 3rd year of operation or 4th year and so on. Okay, so Okay, I give example on the 5th year of operation. Okay, they want to change the auditor. Okay, so on the 2nd year of operation, the existing auditor, okay, and so on, they will be appointed by the shareholders. Okay, by the shareholders. Okay, if let's say in the 5th year, they want to change the auditor, change the auditor. Okay, the scenario, they change the auditor means they have 2 auditors involved here, current auditor and proposed auditor. Okay, so when there is a changes in professional appointment, this one you have to look at certain procedure involved. Okay, so you have 3 situations here in terms of the appointment of the auditor. One, the first appointment, okay, for the new company. Second is appointment, okay, on the 2nd year operation, or you proceed with the existing client. So we call it existing auditor. And the situation where the company changed the auditor. So in the case of Serba Dynamic, where they changed the auditor. So there is a changes in auditor from KPMG to Ernst & Young. So this is called changes in professional appointment. Okay, changes in professional appointment. Okay, we will look at the procedures, okay, on the professional requirement governing the appointment of new auditor. So you have the word current and proposed auditor, okay, and they must have a communication. So this one, okay, for the changes in professional appointment, so you must have a communication, okay, about the client affair. So and then you have okay, this okay, communication about the changes, and then you have as a proposed auditor, okay, proposed auditor or auditor to be, okay, they need to make certain investigation regarding the changes made by the company, okay, and they have a procedure. So we will look at the procedure. Okay. The present and proposed auditor, okay, must communicate about the client prior to audit acceptance. The clients must be asked by the proposed auditor to give permission for this communication to occur. If the client refuses to give permission, the proposed auditors must decline nomination. Okay, so this is the case of the changes in professional appointment. Okay, so kita tengok this one. Okay, this chart, can you see the chart?
Yeah. Zoom in. Made them so small.
Okay. You want me? Okay. So this one. Clear?
Alright.
Okay.
Oh, dia nak apa?
So this is approach by a new audit client. So means that approach means you are approaching by the board of directors to become a new audit client. Okay. So you should ask. Okay.